Guys, welcome back to our podcast. And today we're here with James. James, could you give us a self-introduction about yourself, why you decide to build dYdX, and an interesting story while you founding dYdX?
Yeah, that's a good start to the podcast. First of all, thanks for having me on. I've always respected the kind of depth and quality of your research and podcasts. So yeah, really appreciate you having me on. So yeah, my name's James. My current role is the head of business development at the dYdX Foundation. I've been at the dYdX Foundation for about 2.5 years now, where I've been spearheading the growth and BD efforts globally. Maybe before I kind of dive into the dYdX ecosystem, prior to kind of me being actively involved here, I was in a different industry vertical, mainly in the health tech world, in the operations space. And so I bounced around a little, mainly focusing on kind of healthcare provision. It's something that I'm equally passionate about, but really fell in love with DeFi and crypto and was kind of trading a little bit in the background. And then fortunately found my way to dYdX in 2021. So to give a bit of a background on dYdX and the ecosystem, dYdX trading was started in 2017 by Antonio Giuliano, and really was the kind of, I guess, the first version of the dYdX protocol was launched on the Ethereum blockchain back in 2017. And at this time, really, I guess Antonio was, really a visionary and was very early to what was become really a popular vertical of crypto derivatives. I guess fast forward a little bit to 2021, in April, a layer 2 version of dYdX was released to the public, built on top of Starkware for Ethereum. And obviously this allowed for faster and cheaper transactions and really gave what we believe what users wanted at the time. And now what the team I'm part of, which is the dYdX Foundation, this was launched actually later that year in 2021, in around July, August time, by David Gurgel, who at the time was kind of heading up growth for dYdX trading. And the main aim here was really to support the decentralization growth and adoption of the dYdX protocol. I mean, here, kind of the previous ETH dYdX token was launched, and this was the kind of token issuing entity, which really had multiple use cases at the time, which was governance, trading rewards, fee discounts. And so that obviously carried on really until really March 2022, when Antonio specifically and the dYdX trading team really took the bold commitment to build its own app chain, which is where we are today, which really led to kind of a really solid 18-month period of building to support this. And so fast forward 18 months later of really just focusing purely on building, the dYdX chain, which is its current version of the protocol, was launched in November 2023, and has really been the bedrock for the new exchange, right? For those that don't know, kind of the new exchange is now known as the dYdX chain, and it's a fully decentralized, permissionless, open source app chain, which is ran by 60 plus validators with no real central party taking any fees from the protocol. And I mean, on reflection, kind of at this time, it was just a really bold bet. And as the dYdX protocol was still kind of generating over $1.1 to $2 billion in daily volumes at the time. And even in the kind of previous bull market, I think it was doing kind of $10 to $15 billion in volume a day sometimes. So arguably kind of this had some level of pretty strong product market fit. But I think the interesting case here is, the protocol development team took a bet on this thesis that this product would kind of be the best fit with its own app chain. And this is where we really are today. So yeah, that's a bit of a history on the dYdX side, and really excited to get into this chat.
Yeah, you mentioned the permissionless derivative market. We will come to that later. So we give us a overview of the current landscape of the on-chain derivative markets. What is your competitive advantages?
Yeah, that's a good question. I guess, the on-chain derivatives market has really emerged as this pivotal component of DeFi. there's an offering of sophisticated financial instruments that have traditionally been served by the CeFi world. And, the market's clearly changing. We've seen huge innovative strategies from different teams with integrating new advanced tech, which has enabled users really to engage in more, I guess, complex trading strategies that now with DeFi have this kind of added transparency, security, and efficiency element to it. So kind of talking through, I guess, the current landscapes of what the kind of on-chain derivatives market offer. I mean, it's clear that there's a lot of protocols now, competitors to dYdX, that have kind of sprouted up over the last kind of 1 to 2 years, and it's been great to see. So it's clear that there's, substantial growth elements here driven by, a lot of key factors. I think one thing is clear, that there's just mass increased adoption of DeFi. Mm-hmm. I mean, even compared to 2021, the DeFi sector has really seen exponential growth. I mean, we've seen more capital come in from the traditional players, increased user engagement, and this is naturally extended to kind of like on-chain derivatives, right, where traders do seek to leverage these instruments for, different factors, whether it be hedging, speculation, arbitrage. And, this doesn't discount that there's still a significant greater proportion of users using kind of centralized exchanges and centralized venues. Mm-hmm. But I think it's definitely been helping over the last kind of few years or so with this traditional capital flowing into DeFi a little bit. I think one thing that's helped here as well is, just with compounding and time and tech advancements, innovations such as ZK proofs, cross-chain interoperability, have significantly enhanced this efficiency and usability of derivatives platforms. I think one thing that was a challenge in the past was scalability and cost issues, where, high frequency traders and large trading volumes, were difficult, and nowadays that they're a lot more feasible. And you can see that with, market makers and traditional trading venues, ramping up activity on dYdX specifically as well, which has been really interesting. And I think lastly really is around this kind of product offering. I think now we see the market offering a wide array of derivatives, whether it's perpetual contracts, options, futures, and perpetual contracts in particular have really gained this popularity, I think. Yes. They're simple, and, there's this absence of expiry dates. It gives you exposure to the underlying asset. And we've also seen these kind of like prediction markets and generally more exotic markets come on chain. And, whilst I think we and I specifically don't see the majority of users potentially transitioning to DeFi, or at least using some form of DeFi derivatives, it's certainly gaining momentum. I think the advantages here, or at least dYdX's core competitive advantage, really distinguishes itself through, several things now, which I think is greater than what it ever was, because we were obviously on Ethereum L2 at the time, and now we're our own kind of standalone permissionless app chain. I think, this high throughput and scalability of really building this app chain from the ground up, prioritizing traders who are kind of the heart and soul of the protocol. This kind of really has helped us to really prioritize this, like, I guess, seamless trading experience, even during periods of high volatility. I wouldn't say we're a sex-like trading experience yet, and it's definitely, easier for users to trade on the big exchanges like Binance, etc. But I honestly don't think that we're too far away from this in the future. And as I said before, kind of, I think it's going to be a sort of a hybrid stance where users will still want the kind of performance of a centralized exchange, but may hedge some strategies on dYdX, for example. I guess just to quickly touch on like our liquidity, I think, it's a critical factor for any derivatives platform. And we've, I guess, over the last few months specifically, have managed to kind of cultivate deep liquidity within the books, ensuring that people can trade and execute large orders. We've been partnering with a lot of market makers and different firms, whether that's through DMM agreements, whether that's with different exchanges, to really support on this liquidity front. And there are times where our long tail assets and the liquidity has been typically thin, but hopefully this is going to improve. And I'll kind of touch on these vault structures in a little while when we talk about product improvements and product enhancements. But I think, there's exciting things in the roadmap for dYdX, and I think this is only going to help the derivatives and DeFi landscape.
Yeah, I totally agree. But also, I think that because personally, I think decentralization is very crucial. Well, at least for me, I think it should be the upstream of everything. So, but as you mentioned that you think that especially this year that like products like ETFs brings in the capital inflow a lot of helps to scale up the DeFi ecosystem. So what do you think the on-chain derivative protocols is different from the centralized exchanges? What are the advantages and disadvantages?
Yeah, that's a great point. And I think, it's important to fundamentally understand the difference between these two. Both obviously serve a purpose of allowing traders to speculate or hedge against kind of the future price of an asset. But really kind of they differ significantly in terms of how they're structured, in terms of how they operate, and really from a user experience perspective. I guess, just to briefly talk about dYdX and its value prop. dYdX is obviously this decentralized exchange, right? But when we compare that to centralized exchanges, let's just say we're considering a centralized exchange futures contract. These are very much managed by centralized entities that control the platform. They have the custody of their user funds. They execute all the trades on behalf of the user. And examples here are obviously, Binance, CME, Kraken, etc. Whereas kind of on the on-chain derivatives protocol side, these operate on a decentralized blockchain network. And how that works is they use smart contracts really to automate and execute the trades without any form of kind of centralized party or intermediary. So that's one difference. I guess another difference could be is the custody of the funds, as I mentioned briefly, right? Is in a centralized exchange, users deposit their funds into this. They hold the custody of those funds. This possesses some form of like small or medium or large, depending on how you view it, counterparty risk, where users got to obviously trust the exchange with safeguarding their assets. On the on-chain side, on the decentralized side, especially on the dYdX side, just to double down on this, is our users retain control over their funds through non-custodial wallets. They can interact directly with smart contracts. And, this reduces this counterparty risk, but requires kind of some level of kind of, I guess, like professional sophistication or competency with managing your own private keys. I guess the next would be transparency. I think on the centralized exchange side, operations and order books are really controlled by that exchange. There's limited transparency, and I guess then users rely on that exchange for accurate reporting and execution. Whereas on the decentralized side, you've got full transparency. All transactions can be viewed on chain. Order books are fully public, and users can kind of verify trades and positions. And specifically on the dYdX side, you can go onto MintScan, which is the block explorer specifically for Cosmos. You can look at particular trades that are happening. And so everything is really, really public information. And one key thing for dYdX I want to double down on is this kind of like access part. And access is obviously a really important thing for DeFi. But on the centralized side, access is kind of restricted by heavy regulatory requirements, right? KYC.
Yes.
There are some geo blocking. There's limitations there. But on the DeFi side, these are generally open to anyone with, I guess, like an internet connection, a wallet. And dYdX specifically has always been, I guess, very legally sensitive and sensible with decision making. We have equally on the DeFi side, you can have a mix of the two, right? You can have geo-blocking to some regions. You can have, AML procedures, which are sort of like blacklisting wallets that are being sanctioned. And so this is all kind of adopted at the dYdX level, and specifically kind of like the deployers of the front end interface. And I'll kind of come on to the ecosystem in general and how this is structured shortly. But I think it's just an interesting point that, multiple front ends can be spun up for resiliency purposes here. And on the dYdX chain side, we currently have just one, I guess, main front end interface, which is deployed by the operations sub-DAO, which I can kind of jump into a bit later.
Mm-hmm.
But I guess lastly, just on the liquidity front, right? Like on the centralized side, typically these exchanges have like huge, deep liquidity books, because they have huge user bases, right? Like Binance has 150, I think, million users or something along those lines, or 150,000 users. Sorry, I think it's on the million side, but dYdX, specifically us as a product at the moment only has, I think, around 2,000 to 3,000 weekly active users, right? So it's trivial compared to the likes of these centralized exchanges, and so these often enable these books to be very deep. But on the DeFi side, yeah, I mean, whilst liquidity is growing, it can still be significantly less than centralized exchanges.
Yeah. So what the criteria do you consider when you're listing new tokens? Because I feel like centralized exchanges like Binance, a lot of people are criticized about the standard when they listing new tokens. So what do you think?
Yeah, I mean, that's a good point. I think, these vary as well significantly between protocol to protocol, and between exchanges. On dYdX's side, like the clear thing and the very, I guess, easy thing for users to consider here is that asset listing, so whatever goes onto the exchange, is completely permissionless. There's certain requirements though, there needs to have like a stable Oracle price, a few Oracle sources, whether that's through centralized exchanges, but largely kind of if any user who holds kind of sufficient unstaked dYdX, and I think it's around about 2,000 at the moment, you can propose kind of to have a new asset added to the protocol. And I think this is incredibly exciting, right? If there's like a hot new meme coin that's listed on like Radium, for example, which is obviously over the last few months kind of gave a little bit of hype to people anticipated, and this is kind of kickstarting a bull market, they can have that added to the dYdX chain. And so we want to be that venue where traders can come in, list an asset that they find exciting, and then trade that asset. And, I think users will eventually be able to list a market without even going through a governance process, without even putting up that kind of like deposit capital, because you receive that today. It's just a deposit, you get it back if the market goes live. Eventually, there'll hopefully be a kind of permissionless way to not even have to go through governance. And I believe this is in the works currently on the dYdX side. And this is kind of, I know we're going to talk about permissionless markets a little bit.
We're going to talk about it, don't worry.
Yeah. I mean, exactly. And I think this is a really exciting narrative, honestly. And this is what we really are doubling down on is permissionless market listings, is enabling anyone to kind of trade anything, is kind of a narrative that, and a really a brand kind of, a mandate that we really want to kind of live by. But if we just take the kind of like previous 8 months since dYdX chain has been live, we've had a number of protocol teams and individuals go through this governance process to have their asset listed on the dYdX chain. And what's particularly interesting here is the dYdX Foundation is currently planning to run a new program called the dYdX Accelerator. This is where protocol teams or foundation teams want to incentivize some form of price discovery to an asset. So this accelerator, what it will incorporate is teams reaching out to the dYdX side. We're going to sort of like create a marketing funnel for these teams. And really those teams potentially may decide to allocate part of that asset to traders of that asset on dYdX chain. And so we're hoping this also has some form of flywheel effect with permissionless markets. Again, we're probably going to launch like an MVP version at the foundation level, and then really see what the appetite is here and try and scale that from there.
So what is a permissionless derivative market? To tell us more about the narratives you have repeatedly so many times.
Yeah, I mean, it's a challenging one to build, in all honesty. So I guess building on kind of what I've just mentioned before, so talking about the team structuring, dYdX trading, today, these are the protocol development team out of the US. They essentially build and maintain the open source software, are working together with a team called Skip. They're a really talented team, active in the kind of Cosmos and Ethereum ecosystem. And they're inputting something called this Slinky Oracle system. Now, that went live with this V5 upgrade on the dYdX chain yesterday. So people can actually check that out. More than happy to kind of provide some reading material for listeners. So really, unlike kind of traditional decentralized exchanges on an L2, there's kind of a requirement here on the dYdX side for validators on the dYdX chain to run what's called this Slinky sidecar. And what this is specifically kind of about is it's an out-of-the-box kind of process service that fetches price sources from various data sources and runs this kind of complex aggregation logic to really combine them into a single price feed. Now, obviously, this gets quite technical in how they interact with validators and how to fetch these feeds. But essentially, to give you a long story short, this will be used to enable these kind of like new markets and permissionless markets. And the first kind of DeFi or decentralized exchange Oracle source that will be live is Radium. And as I mentioned before, this was a really popular kind of marketplace for listing some of these meme coins like Joe Biden, Donald Trump, etc. And now this is going to be this ability to list 800 plus new markets immediately. And this is a huge unlock for the dYdX ecosystem. You know, for a long time, we've seen, you know, one or two markets at the kind of fastest be listed every week. This is going to permissionlessly allow 800 plus new markets be listed on the dYdX chain. But like, just to kind of jump back on the permissionless markets definition, as I know kind of what is a permissionless derivatives market was a question. What we really mean is kind of this ability to trade anything, right? We want to create an environment where any user can come to dYdX, trade something that they want to, even if it's not there on the protocol at that moment in time. And we really believe that this is kind of a novel process. Currently, in other exchanges, this is gatekept by a number of teams. And having this permissionless is really kind of a great value add to our users. And we're all really excited to see this go live.
So I have a question. So why there is a need for a permissionless derivative market? I mean, what do you think the impact will it bring into the industry?
Yeah, I mean, I think, you know, people want to trade things, and oftentimes they are fragmented across multiple venues. They can't find one central place to trade this. And we really want to be that one central place. So if a person wants to trade X asset, but it's not on decentralized exchanges, it's only on centralized venues, but they prefer trading on dYdX, then there's obviously this restriction where they'll have to go to that centralized venue. So ultimately, we want to be this kind of like one-stop shop for all these markets. And yeah, I think that's a real reason to, and a real need to operate kind of this permissionless derivatives market. And I think like what's going to change this and what it might bring is I definitely see it's going to bring more users, more liquidity, more excitement. And oftentimes, you know, if we're this venue now that offers an all-in-one solution where we've got the safety of custodying your funds, or sorry, safety of users custodying their own funds, full transparency, multiple markets with high liquidity. We hope for this will kind of enable us to be the venue of choice for trading these permissionless markets.
So does that imply when you listing, let's say when I listing a token, I will no longer require human approval? Because I remember you mentioned that there's some more technologies that you use is not human approval, right?
That's correct. Yeah, and so I definitely think that's the case. So previously, dYdX chain was operating as this kind of purely cross-margin exchange, and thus adding these types of markets, puts the exchange solvency at risk if there was anything to happen. I think with this new permissionless markets, with the now ability for markets to be added potentially without this use of a human or governance proposal, what comes with this now is this isolated margin and markets. And so this reduces risks to all those trading that asset. It has an independent insurance fund. And so right now, if these assets are added to the exchange, it's at a fairly low risk state. What we're kind of doing in supplementary to this is adding like an MVP vaults-like structure to really help kickstart liquidity into these particularly kind of like volatile assets initially. And so users will be able to trade this asset after it goes kind of through this vaults-like liquidity engine. I guess, it's also worth reminding users and listeners that these assets can always be removed from being active. It's not like they're just stuck on the exchange. They're detrimental to user funds. That's just not the case. At the kind of protocol level and governance level, these assets can be removed at any time. And specifically on the dYdX side, we have the product development team, but also several other teams that are also governance funded, such as a team called Chaos Labs and other grantees that fund monitoring dashboards and specific risk management tools. And I think most traders are pretty happy with this and can really choose to trade based on their own risk levels. We obviously don't offer leverage more than 20x on markets. And when I say we, that's kind of like the protocol in general. I think as well, the DAO, which is this decentralized autonomous organization, are pretty sensible with complying with regulations. And I don't see that changing. I see us being very strict or even sort of increasing the level of strictness in this front. And so, yeah, that's how I view it in terms of, risk, the human approval approach and going through software.
Speaking of risk, you just mentioned that the leverage has limits on exchanges, and also what else strategies you have to protect the investors' assets? Let's say if especially with the highly unstable meme coins.
Yeah, I mean, that's a good question. I think for if I talk about the whole ecosystem in general, just from a sort of entity perspective. So today we have dYdX trading, which is this protocol development arm. We have the dYdX Foundation, which is the team I'm part of. And these are the kind of growth and BD entity of the ecosystem. The foundation is this kind of Swiss-based non-for-profit, which really supports the kind of governance and growth of and adoption of the protocol. We also have this dYdX operations sub-DAO. They're also known as dYdX Services Limited. They're a Cayman foundation. Now, this team are actually the team that hosts the front-end interface. They host the iOS app. They host the Android app. They contract a team to run the indexer and have around about 5 full-time staff now. Now, this was kind of DAO funded. And so no aspect of the exchange is ran or operated out of the US, and kind of doubling down on like no entity actually receive any fees from the protocol. And then we also have this dYdX Grants Trust. Now, these are a Guernsey Purpose Trust, and these have been around for the last 2.5, nearly 3 years in the dYdX ecosystem. And these teams really are sort of giving grants out for teams that can provide value and net positive sort of growth to the dYdX ecosystem. I think one thing that really helps protect users is having this front end operated from an external team, which is exciting. There's obviously these limited risk factors in terms of the volumes you can trade, the liquidity you can put into the token, the leverage that you can trade. And so that's probably how I feel like we reduce the risk of any users who trade on dYdX. And yeah, this is always monitored by the protocol teams, the different sub DAOs, the different contractors that we currently are working with. And so, we want to give users the ability to trade anything based on like predefined risk factors that we also operate on the exchange level.
When you mentioned like want allow user to trade anything, like I'm just curious. So let's talk about culture. So what is culture of dYdX? Because I feel like, because you mentioned the open source protocol and also decentralization, a little bit like Ethereum's layer 2 cypherpunk culture here. So I just think it's interesting if you can share with us.
Yeah, for sure. I mean, dYdX, I guess, the whole ecosystem from what I'm talking about, the dYdX DAO and the dYdX ecosystem in general has a really like positive, forward-thinking culture. I think we're, have been fairly innovative in terms of the direction that we've taken. We were really kind of, I guess, a blue chip protocol who at the time of decision making to be your own app chain was a really novel idea. And I think it got a lot of pushback from the ecosystem. But in general, I think a lot of these now specific chains for specific purposes have kind of like, come around to the fact that this was probably the right approach at the right time.
Mm-hmm.
What we've seen in the ecosystem now is a lot of other teams do similar, and I think we'll only continue to see that trajectory. And I think what's happened is for the time we were building the dYdX chain, there were also other really talented teams that were building perpetual trading venues. And so the competition has only got stronger. And now we have this sort of wide array of different trading venues that users can kind of trade from. Whereas previously, I think it was pretty limited and dYdX was clearly the market winner. I think now that discussion is a little bit more murky. And I think, there are teams like the Hyperliquid team, the Avos of the world that are really talented and are clearly building fantastic products for users. And so this competition only increases the ability for us as an ecosystem to innovate, to move faster, to break barriers, and really just to try and think through what are the next kind of like 10 to 100x growth opportunities for us as a kind of DAO and an ecosystem, but also as just a sort of a crypto community in general. And one thing we're trying to get better at and be more active in is engaging with the community, taking in product feedback, having a better understanding of what our users want. And so, yeah, I think in general, the culture's been excellent. And yeah, this cyberpunk, this kind of Ethereum L2 ecosystem of continually progressing and innovating.
I just feel like the different chain has different character, just like a person. So the different culture of the ecosystem can attract different group of people, different group of users and developers to come to your ecosystem. So what is the incentive? Because you said before that compared to large exchanges like Balance, the user base right now is relatively smaller. So what the incentive that you encourage people to trade here?
Yeah, I mean that's a great question, and I think it comes back to the advantages and disadvantages, right? Of people come to the dYdX chain because it's decentralized, the trustless nature of it, it's fully transparent, they have full control over their funds, it's accessible to anyone, and we're kind of innovating at a lot quicker pace, right? We're a smaller team. We still class ourselves as kind of a startup, and I refer to us as kind of the whole ecosystem. And so we're able to move fast. We're able to take feedback on quickly, really sort of build those feedbacks into the product. And I think that's why a lot of users are coming and using dYdX chain. I think, like you said, though, culture is kind of like different from exchange to exchange. I think traditionally we've had this culture of being a very, I guess, market maker, institutional heavy chain, and less kind of like retail focused, and definitely resonate with users who have kind of had that viewpoint of dYdX. But it's something we're really trying to change. And we really want to be this venue where there's a lot of retail and pro-retail traders coming. And so that's really, I guess, our value prop in some sense.
Okay. So your roadmap also mentions the improvements to core trading futures. So what does this refer to?
Yeah, great question. I think the number one priority, first and foremost, for the protocol development team is reliability and stability. I think they've got to a good place here. Oftentimes it's very reliant on the 60 plus validators who run the dYdX chain. And I think this will be, a continued focus and sort of P0 priority for us going forward. Aside from kind of this slinky vaults and permissionless markets, there's other ideas that's being thrown around. We've definitely seen excitement about these kind of pre-market listing tokens. Before this asset is even live, teams are speculating on that price of the asset and are listing that sort of pre-market, which is something we're investigating. There's prediction markets, FX markets, sports betting, and I think this is probably around, 6, 12, 18 months down the line. But we naturally, again, want to be the venue where traders can trade anything and are attracted to this, right? On the kind of near-term horizon, there's CosmWasm, which is a smart contract platform on Cosmos where developers can build features on top of dYdX. And this is getting quite a lot of excitement from the developer community, which is awesome. There's also going to be this kind of custom fee ability to charge a percentage on top of the protocol. So if individuals want to deploy a front end, for example, let's say, dYdX.trade is the current front end for all traders who want to trade through there. Let's say in Japan, a team wants to create a customized interface for Japanese traders, then they'll have the ability to charge kind of a percentage on top of that, which is huge, right? I mean, this is huge for growth perspective, but also for resiliency purposes. And lastly, we're thinking through a process of figuring out like an affiliate referral program. We really want to integrate with the likes of aggregators, trading bots, Telegram bots, on-chain, off-chain terminals that will really help drive material kind of volume and user growth for the dYdX chain.
So let's talk about the regulation. Because the regulation, I think, is increasing like pressures nowadays for all the exchanges. Because I'm in Hong Kong, and especially in Hong Kong, in Asia. So the regulation of DeFi in the US and let's say other countries. So do you face the regulatory pressures now?
Yeah, I mean, that's a great question. And I think it's something that the whole industry is obviously aware of. There's always this kind of like concern over regulatory compliance in DeFi. And I think we're naturally looking for clear guidance and guidelines here. But I think at this stage, we're really doing all that we can in the positive sense, right? To reiterate, like the dYdX chain is a fully decentralized, permissionless, open source protocol. No central party is operating it. dYdX trading, the protocol development team, obviously is in the US, but they're now purely maintaining the software. They host no part of the key infrastructure of the trading interface. And the operations sub-DAO, which is a Cayman entity, host that front-end indexer, iOS and Android app. And I think to make that more resilient from a regulatory pressure, perhaps, or just from, even if there's a fault in the operation of the front end, this is why we're looking through for additional teams who are wanting to build these kind of interfaces. Yeah, I mean, in terms of kind of global operations, the foundation is really kind of this growth and BD entity of the ecosystem. And so we have a lot of contractors and full-time team members that are based regionally. And so we have, let's say, a head of India, we have a head of Japan, we have an Asia growth lead, we have a head of Turkey and several other regions. And so we actively engage in kind of legal counsel regionally to ensure we're adhering to kind of all local laws in that sense. This is just to clarify, this is extremely important to us. And I've always been kind of cautious about what the exchange offers on that sense. But in general, I think we're really optimistic about the future. We're proactive in addressing regulatory pressures by integrating all the kind of compliance measures into the network, as discussed with kind of AML, geo-blocking features. We engage with the regulators. And really this kind of ensures, I guess, the platform evolves in line with regulatory standards globally. Truly believe this approach is the best approach, and it really helps mitigate risks and positions dYdX as a compliant and trustworthy player in the DeFi space.
Do you have or your team have the preference? Do you have any preference, regional preference of the users?
That's a good question. I mean, we definitely monitor this. I think previously a lot of our growth came from the Chinese speaking regions, and it still is today as well. Yeah, absolutely. And today, a lot of our volumes and fees get driven from Singapore, Hong Kong, Japan. And so Asia is our big market. Mm-hmm. We have, I'd say, fairly little coverage in Asia, in all honesty. We've just had this kind of natural adoption in those regions. It's something that we're prioritizing over the next, really from now ongoing, is, how can we find really impactful and important teams within these regions to effectively grow and market together. So those are our really kind of like key priority reasons in Asia. And then we have other regions in Europe as well. But I'd say the majority of our volume and fees get driven from the Asia region, which is really exciting, right? Like we haven't had a huge exposure there. We haven't spent much time there. So hoping that, if we can go to market in an effective manner, then it will only kind of like double down on these kind of growth factors there.
Yeah, because the Asian people like speculations. So I think that you guys should have solid, like if you have solid marketing strategies, I think Asian is welcome to the decentralized exchanges very much.
100%.
So, yes. So I think for the last question of today's podcast, so share with us the next move. Your next move, or let's say next milestone, will be your roadmap of this year, especially in bull market?
Yeah, great question. I think on the foundations front, you've pretty much hit the nail on the head with the Asia focus. We're really thinking through how to grow regionally and creating the right incentives for users of those regions to onboard to the dYdX chain. So that's really kind of like the foundations focus is growth. We've recently hired a brand new CMO and a social media manager, and really want to be deeper involved with the community. And we see this as a really important kind of priority for us. The next is really kind of fine tuning this liquidity engine through vaults, through permissionless markets. And we really see if we can create a good flywheel here that users will just be attracted to use dYdX chain. I think right now, what users don't realize is that if you trade on dYdX chain, you get dYdX as the token as trading rewards. If you stake that dYdX token to validators on the dYdX chain to secure the chain, you're getting around 20% APY, and staking actually gives you USDC in rewards. And this is fairly novel. You don't see this in many other exchanges. I believe we're one of the only ones that do this.
Yes.
If you stake that dYdX, you get USDC. And then the positive flywheel here is you can then funnel that USDC directly back into your dYdX chain account and trade with that USDC you've made from staking. And so, in complete honesty, I really do believe we need to improve our branding. And this is where kind of hand-in-hand growth comes into play. So we're really excited about the next kind of 6, 12, 18 months as the market continues to pick up. We really believe that we kind of positioned ourselves in a good spot to really bring in this new wave of users coming. And so, yeah, hopefully check back in 6, 12 months and we'll be in a good position here. But excited about the next run and hoping that, we're in a good position for that.
Yeah, good luck. So
thank you.
Thank you, Max. James, I'm sorry. Oh, what's wrong? James, thank you for today's podcast. And thank you guys for joining us. If you have any comments, just leave in the commentary section. So wish you have a good day. Bye-bye.
Thank you very much. Thank you very much for your time. Really enjoyed it. Thank you.
Thank you.